Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 4th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that all impacts the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I go a little bit further and layer on option strategies that I find to implement around those market assumptions we come up with. It's not just willy-nilly picking out an option strategy out of a hat. What we do is we go through the guidelines as to following a path in order to find the right strategy for that underlying in and around what the environment is doing to those option prices. That's what really determines our strategy. So without further ado, let's get on with the economic data. Across the pond, we got Spanish unemployment coming in better than expected there. 89.8, expected to be 19.5. So that is the unemployment change. Sorry, that was a negative 89. So the unemployment went down because of that negative number. Here in the United States, we got the tip economic optimism coming in at 46.8, expected to be 45. And remember, anything better than expected is better, but anything above 50 is really expansion territory. We're just slightly below that right now. We got factory orders coming in at 6.2%, expected to be 51.1%. New orders was up 3%, so that was a really good number there on the factory orders, and we've kind of seen that through this whole manufacturing process with the PMI. Things of that nature has really been showing that this is probably going to be a pretty good number. And keep in mind, this is based on the durable goods orders also. This is the final data there. That's pretty much it for the United States and across the pond. So let's move on to the overall markets. We've got crude oil moving higher again today, up by about 60 cents on the day, holding on to those 40s. It looks like it's going to be there for a little while. Bonds up a point and change there, pushing up against my 83 fib there that we were talking about. That this whole area is going to get real. It's a real thick line because we've got two separate Fibonacci's lining up quite nicely with the value area high. We start getting overextended above that value area high. We start losing some momentum as we've seen in the past. This has been a very major area of resistance, that 183 handle that we are literally just a couple of ticks away from right now. A break above and settlement above that would mean that we are looking at the 186 handle. So I don't think that that's probably in the realm right now. The Fed is saying that they are going to keep interest rates suppressed for a foreseeable future. We're still kind of back and forth with this next round of stimulus that probably is going to go through. It just depends on how much we're going to get there for that. So that should help the overall economy. Now, so the bonds are showing some more of that little bit of weakness based on the fact that it's more and more likely that we are going to see another round of stimulus. Now, gold is making a move higher. We were seeing some strength in the dollar yesterday after several weeks of weakness, which has been a real move in the gold futures. Now remember, these are very correlated. Dollar weakness is bullish for gold as it is dollar denominated, but makes it a flight to safety for currency as well. Today, making another move to the upside, and as you can see, up into that 2000 handle. We've only touched on there a couple of times, right, and broken through, settled back down into the 19 handle. Today, with this strength, it looks like we could have that 2000 handle sticking for some time. We might see a couple pullbacks here and there based on this vertical move, but the weakness over there in the dollar, and if the Fed comes out with another round of stimulus, that's going to further weaken that dollar, giving the gold bugs a lot of momentum for the upside. All right, VIX is starting to creep a little higher. We're just now moving back into positive territory for that because we're seeing some weakness over there in the Nasdaq. Now, Dow Jones Industrial Average still up 100 points, which is a nice move on the day. Looks like we are very close to getting that 50-day moving average, crossing over the 200-day moving average, which is another bullish sign there, not just on the technical setup, but you get that crossover. That is very bullish moving forward. Now, something to talk about with heading into the end of the year. We're in the second half of the year, basically 70% of the year, or 60-some% of the year already over. And now we're looking towards the end of the year, get rid of 2020, right? I mean, everybody wants that out of their minds. It will go down in history as one of the most trying years that most of us have ever been through. Anyway, moving forward, we get a vaccine. We're going to see a lot of these companies that haven't done very well during all of this really get some momentum to the upside. Yes, it's going to take a long time for this vaccine to get out there, but what we're talking about is a psychological thing and forward guidance and things of that nature with that vaccine. Some of these companies, like the travel and leisure, which was doing very well yesterday and continuing a little bit today across the board, the travel and leisure, people are starting to think, okay, there's a lot of people that are very close maybe to a vaccine for COVID-19, and that is giving those guys a little bit of a head start there. So keep your eyes on some of the non-tech names that have been a little bit of the laggers, have not really been able to take advantage of this opening up of the economy. Those are going to be some value trades going on. All right, here we go with the Nasdaq just moving into negative territory, making this all-time high in the Nasdaq. But something to note with that all-time high here, you guys, is that it was an overnight print. Yes, in the day during the day session off the morning, we tried to get up there, which was still a high for the Nasdaq. Did pierce that, but this overnight high isn't really something that is going to be looked at by chartists that it is a solid number. So actually I wanted to go to the day session and turn off the extended hours trading. So here we can see that print today is an all-time high, albeit the overnight is what most people are seeing. That could be discounted by most people as being an all-time high because it wasn't printed during the day session. And E-mini S&Ps making a move, trying to get above that value area high. We just came up shy of that yesterday, bumped up against it a couple of times, moving into the close, looked very strong, but just came up shy of that. We are going to see some profit taking happen as soon as we start getting out of that, because it's where people get a little overextended to the upside. People taking profits are going to want to book those profits. It's just a psychological thing where they know that they've gotten great pricing and now it's getting a little bit high, that they might want to trim back some of that stuff. So right now, E-mini S&P is pretty much close to being unchanged on the day, up about 1.75 as we speak. Now, trades that I've done. Coca-Cola, you guys know that I've gotten long Coca-Cola and have been lowering my overall cost basis on this quite a bit over the course of the time that I've been in it. Part of the problem with Coca-Cola is it doesn't have a whole lot of volatility in it, and I'm not able to get really far away from where the underlying is currently trading in order to get great pricing on some of this stuff. But excuse me, if you guys remember on this trade, I started out by selling some puts in there way back in February when all of this stuff started coming off. So yes, it is part of the reopen trade. And I had sold the 53 puts in there for 40 cents, 40 cents in there. Sold some 30 puts in there for a total profit of about 63 cents in there. So I'm at about $1, lowering my overall cost basis on that. Had sold the 50 calls. That's what I went in and covered today. So those August 50 calls in there that I had originally sold for 33 cents, those are basically covered calls. I wasn't covering the entire trade on that. I was just basically covering portions of it. And with the selling the 30 puts also was about half of a tranche of what I had on. So in that lowering the overall cost basis by $1, let's call it, very close to $1. I covered about 50 cents on my overall position. So I'm long at 53, right? Because I sold those puts, got long there at 53. So I've collected $1 in credits for the most part on the original, or 50 cents on the original one, $1 since doing this dollar cost averaging and lowering the overall cost basis. So I basically collected $1, but we've got to cut that in half to about 50 cents because I didn't do a full tranche of what I own. So I've lowered my overall cost basis of 50 cents by selling the 30 puts and the 50 calls, okay? And then the original 40 cents. So my break even right now, we're going to call it right around $51.50. Now I just decided to go also in, and with this pullback in Coca-Cola, since I put on those short calls, you can see I've gotten a pullback right down to the value area low. Gives me good opportunity for adding some to this trade, dollar cost averaging. If I could get in around that $43 area where we've seen a lot of support, a lot of buying come in as people come in to support that, that seems to be where people find really good value in Coca-Cola. So I went into the September, it sold the 43 puts in there for 49 cents. Again, not trying to double up on my position, did about half of what I already have to add to that. So just doing a little dollar cost averaging. If it looks like I'm going to get hit on those, I'm going to average again, because I think Coca-Cola is that opening up trade. When we start seeing the restaurants and bars opening up, this company is going to do very well and start taking off to the upside, especially like we got a vaccine or something. Coca-Cola has been a real lagger compared to especially like the tech sector, and should do very well in that type of environment. Another thing that I'm keeping my eye on is this Kodak trade. You know, remember they got $760 million for basically producing the ingredients that go in generic drugs. So they got that big, huge spike as soon as that information was released. I'm still waiting for a little bit more of a pullback here. You know, I had talked about it, about $5. I was looking to pick that up back here on, what day was this? The 28th. And obviously never got that move. It traded up to 60 as people were really flying into that. Halted this stock a couple of times in trading, but it could want to come down and try and cover this gap here. Now that's kind of what I'm looking for right now. I've upped my price target on getting into this trade, so I'm looking at around $12 to try and pick that up if I get the opportunity. So Kodak coming back to me. Hopefully we'll see if we get that move. I'm probably going to just purchase the stock and put it in my IRA. I'm thinking anyway, they don't have very good options in here. As a matter of fact, I don't even know if they have options in there yet, which, you know, with a higher price stock, they should start doing that. And they do. Markets are a little bit wide for a $15 stock. They're like 15 cents wide. So that's outside of those guidelines that I talk about in to make it a green light for trading options. So we are keeping our eye on that as a pullback. I don't think I'm just going to go out there and buy calls and something like this with the options not having great markets. Volume and open interest. I mean, actually open interest is starting to pick up a little bit in there. So the markets, people are starting to gravitate towards the options in here. But yes, the markets in there are still like 20, 30 cents wide for a $15 stock, which is not good pricing. So, but that's also, look at this volatility. I don't even know if Tesla's gotten volatility like this up into the 2 and 3 handles. So that's part of that really wide markets there. So I guess it could be a good opportunity to sell some puts in there, which I might actually go there and do. Let's take a look at this, and because I really do want to get into something like this, Kodak. We get that pullback, I could easily do something like that. I could probably do in my IRA some cash secured puts in there. So I'm going to look to sell, but I want to buy it at 12. So I'm going to sell the 12 puts in August. I'm looking to sell the August 12 puts in there. So let's see if I can get on this trade. I'm going to do it pretty small though. I don't want to step into the market that quickly. So let's try selling those 12 puts at I just got hit. 12 puts at $2. I went mid-market right off the bat just to get this done, and I got filled on those immediately at $2. All right, so I am in that market. I'm in the KODK, so sold the August 12 puts in KODK. All right, that's it. That's all I got for you guys, other than take a moment to go over our disclaimer. This is not a trade recommendation on KODK. I'm just talking about, you know, trades that I find, when and where I find them, and how they might be appropriate for me. It's up to you to figure out whether it's appropriate for you. Make sure that you go over this and realize your risks are of losing money in trading any type of security and or derivative. All right, so that's all I got for you, other than if you can't take that, take it easy.